Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is already Wednesday, right? No, it's Tuesday. It's Tuesday. I was just, so if I come over here, the reason why I was thinking maybe it's Wednesday. Like, I knew it was Tuesday, but as soon as I started to say that, I started to think, wait, maybe it's Wednesday. Why did I think maybe it's Wednesday? Well, because we're supposed to get jolts today. So why are they doing jolts on a Tuesday? I don't know. But I think you can kind of see it here in the DOM. So liquidity is actually a little bit thicker than it was yesterday. So that's interesting. But activity levels are very, very low. We have hardly done anything since we opened. So it seems to me that there might be more players in the market today waiting to see what the jolts does. And that may also have something to do with the action that we saw yesterday. So let's go to the charts. All right, so here's the treasuries. During our session, it was mostly okay. So this blue line is when we start. Okay. Started out okay, but then after I left, things fell down and they continued selling later into the day. So this kind of lines up with some of these other moves that we had back in here, where it seems like a lot of the selling happens after, well after the blue line. So there is somebody persistently selling the treasury market, but they, for some reason, they do their selling later in the session. It could be a large country that had been divesting themselves, like maybe Canada or the EU or something like that. But it also seems like, you know, when you do something like that, you do more at the beginning and then it kind of trails off at the end. And it looks like we're getting to the end of that. It's not having as big of an effect. And in the overnight, we have recovered that. So S&P 500, pretty okay recovery yesterday. I should note, though, that all of the models are starting to suggest that the CTAs, the trend followers, etc., are all long and that they are now sellers in most scenarios. So that is likely to be a drag on the markets. If tariffs and all that sort of stuff goes well, it could just mean kind of like a little bit sideways. But that is, we are entering into a slightly different regime here at the beginning of the summer that you should be aware of if you're trading SPOOs. Oil, well, after the big up that we had yesterday, which I think was largely driven by dollar weakness, mostly consolidation here. Gold had a pretty good move yesterday. Not back to new highs, but it's looking okay. Silver, woo, silver really went. What the wait? That's wow. $2 overnight. That's one of the largest jumps we've had in silver. I might need to go and look at that. Maybe it's finally happening in silver, because that move is a little. That's got some signs of real panic in it with the way that moved. Okay. Copper. Now, copper had a big jump up because there's all this stuff going on with tariffs or increasing tariffs on the metals. but it has given most of that up in copper. Japanese yen. Okay, so a little bit of mean reversion, but this was, yesterday or June 2nd, pretty decent decline in the dollar, but it looks like they've recovered about 3/4 of it. And Bitcoin, well, they were really excited when we busted up into the 112-ish area. We're still kind of around 105 though. Very interesting. Okay, so for today, I would expect it to be pretty tight and choppy until the JOLTS number. And last time they had 7.192 million. And remember, that was a pretty big drop from what the market was expecting. Now they're expecting 7.1. So another miss on JOLTS would probably be a pretty big red flag to the markets, and you might see more growth concerns. And I would hope that would push the treasury market up. But I think that scenario is probably a little bit less likely. I think things have been going a little bit better. We're in a seasonal period where jobs are a little bit better, or at least the tail end of a seasonal period where it's better for jobs. And so I think that 7.1 is probably a pretty good estimate. If not, maybe they might beat that. But for the next 90 minutes, it's probably going to be a little iffy. Now, we did just get a decent sell come through here in the treasuries, bringing it back down to the buyer's cost basis. All right. Octavia says, yepper, I don't know what he's yepping about, but... And AO says, I'm early. Well, I was actually way late. I spent 5 minutes looking for my pants. I couldn't find my pants because the kids got into the closet. But so I was kind of rushed and I didn't even eat. So I'm super late. So I'm going to eat. Let's chill for a little bit. And then maybe we can discuss some things. I'll have to do a little bit of research about silver because that move sticks out to me. I think there might be something going on. Bankrupt Microsoft back AI company was using Indian engineers to fake it. Yeah, I bet. Oh, there you go. Silver squeeze awakens. Options market screams for more. SALV just broke to decade highs. Upside skew is exploding. Call spreads getting loaded. AI demand, gold catch up, gallon fuel. This could get wild. SLV's weekly closed at the highest level since 2013 during yesterday's squeeze. Note that the longer-term trend channel remains intact. Okay, so they're not quite to those levels shortly after COVID, but they're going. Just above that magical resistance, a close slightly higher and things could get dynamic to the upside. SLV upside skew makes call spreads very attractive as upside volatilities are extremely well bid. Okay, so something is going on in silver, but apparently not enough for it to be a big panic by the Wall Street analysts. At least not yet. They're talking more technical stuff. Okay, I'm going to eat here. Man, I do not have no clue how to say that name, and I'm not even going to try. But he says ZB is so slow the last few days and weeks. Well, we are getting into summer action, and it's going to be slower during those times. Although I do think that this 10 or 11 tick move down that we had in ZB is a pretty good one. I don't think that it's a flow that really could have been very well predicted. The way that the flow came through is a little bit odd. Okay, your name is Martin. Okay. You see here in ZB, like, yes, it was selling, but it was kind of a little bit weird back and forth. But they got crushed. I'm wondering if that had to do with some sort of okay, yeah. Looks like the Japanese yen was moving and the dollar was moving at that time. So it might have been more a currency move, but ooh, this is just reminding me, I need to turn on a robot. But that was I mean, for the time and situation, that was a pretty good move. Yeah, you get much slower fills, yes. Yeah, I honestly, so the first year that I was trading, or at least streaming, so 2017, and that spring we did incredibly well. I went through this period at the beginning of the stream where and I was looking for explicit signals, and they would work literally every trade. Like literally every trade was good. And then the second half of May and into the summer, I don't think it was literally not a single winner or not a single winning day. It was dismal. I didn't know what I was doing. And I just didn't realize how significant of a change the liquidity in the summer was. And I didn't adjust to that, and I just got creamed. Yeah, when summer markets come along, there is less liquidity, there is less activity, and I would recommend against having positions on unless you have a really explicit reason. Like these sorts of things where it's like, oh, they moved down, and I think that we're gonna bounce right back up, and that don't play those games, because where it might do that kind of bounce in regular markets, summer markets, they will just stay dead. They just stay dead, and it's terrible. And I can remember sometimes in ZN sitting with a limit order for over an hour and not getting filled, with it being like at my price the whole time. Happens sometimes. For me, it changed when Trump started the tariff show. Yeah. You know, the first time around with tariffs, we had a lot of really good... I made some really good trades during the first Trump tariff war. But this time around, I haven't really taken a whole lot of risks through it. And I would say broadly that the moves just haven't been as good. For whatever reason. I'm pulling up this thread on Reddit. What hobby is an immediate red flag? The first couple of comments are like joke comments, not serious. Posting absolutely everything on social media, arguing for fun, being an influencer. So I find it interesting that number 3 is being an influencer. I suppose if it's a girl and they're a quote-unquote influencer and they don't actually have any kind of expertise, is that what people are thinking of when they're talking about being an influencer? I don't know. I definitely get this vibe from people. It's like, oh, you have a YouTube channel? They don't like you. It's like there's this strange there's a certain segment of the population that just has this strange kind of jealousy towards anybody that has done well on social media. The strip is in sync, no backticking. That's true. They did not backtick through any of this trend. It's kind of like it came down and it died. I really am still thinking that this was largely driven by the Japanese yen, but Japanese yen started dropping before the others. Period where the Japanese yen dropped the most, the treasuries were dropping the most as well. The yen has continued to push lower even though the treasuries can't. So it seems like that it could be some correlation, but that the treasuries have already kind of like they're tired out or something. I don't know. It's a little bit of an odd move overall, I would say. Looks like I did get a signal short here, but it's not. It only got 1, 2, 3 ticks, and that happened before I turned it on. I would be, if I had gotten that short, I would be concerned about it flipping back, right? Like what often happens is it flips back and it ends up taking a loss on the trade. So especially during really tight, slow market, I would expect this algorithm to do really terribly. I think when Octavius, well, I don't know why he says strip in all caps, but I think what he means to say is that all of the different treasury instruments moved together. Like when they ticked, they all ticked down together. And there was not any backwash. There wasn't at any point where like it rose back up 2 ticks really quickly and then dropped further down. So that means that whatever is causing this move, something that affected everything across the curve. And when you get a good trend across a curve, those trends are more likely to continue, or at least that's the theory. I don't have any data to back that up, but it sure does seem to be the case to me that when they all move together, those moves are more reliable. By the way, there's a big offer there at 14 that's a little suspicious. But I still think that the move, like when you look at it in terms of cumulative delta, how much volume did it take to push them down? Even when you look at the ZB side, it wasn't that much. It was about 1,000. About 1,000 overall for the move. It's just not that much. So it probably was a correlated move with the currencies. You know, it's been pretty grindy since 22, but they still have not upticked. And I'm kind of wondering because, like, one thing that you might say is, well, what if it was not the currency correlation? I do think that it is the currency correlation, but what if it wasn't? Well, my next best guess would be somebody front running jolts, but I feel like it's way, way too early for somebody to be doing that. At the same time, I don't really see any good reason for why the Japanese yen would be on such a strong downtrend. But look, they're hitting this iceberg at 20.5, and it's not budging. As soon as I said that, Octavia something noticed it too. So you notice that, like, as they've been hitting this, that it's been like over 2,000 contracts on the offer the whole time. So there's a big boy there selling. If they can get through it and put a good bid at 20.5, okay, that might actually be good for a little bit of a reversal, because that means there was a big player they were selling, they got filled. That might be the end of it. I don't think that this is worth a trade from me, because I think that your most likely scenario is you get 22. I don't know if 2 ticks is worth it in this situation when it's this grindy. Went on a whole big rant there, and I didn't even have the microphone on. I was just saying you can buy 21 if you want, but I'm seeing iceberging there at 21 as well. So that doesn't necessarily mean that it's not going to reverse. I do think that this situation has a little bit of reversal written on it. Basically, you've got big sellers. They've been selling a ton. People are finally filling them, and so those icebergs get filled. Good chance that we have a little bit of a reprieve and we pop back up. But probably your best bet is that it reverts back to 22. And since there's still iceberging at 21, that means that even if they do it, it's going to be grindy and fight you every step of the way. So it's probably going to be a really frustrating trade. Does kind of set us up for maybe some fireworks when Jolts happens, though. See, now the offer is kind of acting all weak, but then they hit it and it refreshes. So I'm still suspicious of it. It's going to be one of those things where it's going to do that, and it's going to do that, and then when it does break, it's like up 2 ticks, and you're like, and I'll be like, oh darn, I missed it, you know. I think this is one of those. So it seems to me that there are some patterns out there that happen that the pattern essentially makes it like impossible to trade. You know, like either it's going to iceberg there and then they're going to shove it down further, or the iceberg is going to break and they're going to pop back up. Right? And so you could sit and be like, okay, I can wait for the iceberg to break and then try and make money on the pop. But if you try and buy it immediately after that, you're going to lose because you're not going to be fast enough. I suppose that means it's a pattern that's already kind of has too much like volume chasing it. But I find those frustrating. Because it dominates everything that's going on, and then it's hard for me to make money on it. So like, this is why when I see those signs of those large players, I don't want to be involved. The good play was to see that the Japanese yen was dropping when it was still kind of stuck here at 26 and going short, and then taking it off here. And taking it off and giving it to that iceberg. But once you start to see the big players and the big orders show up, by the way, that big order, I don't remember what price it was at, but it's gone. Once I start seeing that stuff, the shenanigans, I shut down. Disney is firing several hundred employees across multiple different departments. It's probably just the same kind of layoffs. Weight trimming. You know what? Something that really bothers me. There's this idea that there are a lot of employees that aren't actually doing anything. And I think from my own experience in corporations that is true. There are a lot of people that don't really get a whole lot done. Where I can go in and I can handle like 3 or 4 things in a day. And then they are kind of like twiddling around and spend like 3 days on something that should take 5 minutes, you know? But I think that there's also this idea that like the people that are, it's like the myth of the 10x developer. It's like those people that are really productive, they're just super smart and really good employees. And that's why they do that. And the other people that aren't, they're just really terrible employees. And I don't agree with that. I think that most people want to do well. And the ones that aren't doing well, there's usually some sort of organizational problem there, right? Like, best case scenario, they've just kind of been put into a situation that doesn't match up with their skills very well. They're not motivated, the manager's not managing them correctly, etc., etc., etc. And so corporations, instead of saying, hey, we need to do everything that we can to make our workforce the best workforce in the world, and the way that we do that is not necessarily by just finding these people that are just naturally 10x developers, because it doesn't work that way. The way that we get there is we make them that way. You want to know why? Just like real talk, I really believe this. Some people might not believe me or disagree with me, but I think this is the case. You want to know why Goldman Sachs has such an effective workforce, or traditionally had such an effective workforce? Like, they were making more money than banks multiple times their size before the financial crisis. How are they doing that? Well, they certainly do a lot of recruiting, pick really smart people, go for the best people at schools and things like that. But they also put a ton, and I mean a ton, more than any other company I've ever seen. It's not anywhere even close. They put a ton of investment into their employees. Like, it was expected that you would be doing some sort of a training or activity of some sort pretty much every week at that company. Yeah, I learned a lot of things there that has really carried me through other jobs where like I can really do like just about anything, and most people are kind of like, well, I've never done that before, I don't know anything about it. It's because they train the people. And instead of investing into their people, most corporations are just like, well, what we actually need to do is just do blanket layoffs and hope that the blanket layoffs get rid of all of the bad employees. When that's not what happens. Like, the people that get laid off, it's often like, for really, you know, what gets you in that situation. I don't think it's necessarily fair. It's really not this like, well, the best people are going to stay because if you were performing, you'd stay. And no, it doesn't. Markets aren't informationally efficient. And certainly the labor market is probably the least efficient of all the markets, right? What is the cost basis? A good question. 22.5 is buyer's cost basis. So we are right at the buyer's cost basis. while I was ranting, we did pop up back up to 22.5. So it looks like the trade from 21 to 22, the 2 ticker there, would have worked. But it was, as I said, there was iceberging at, well, I didn't see how much there was at 21.5, but there was iceberging at 22. And it took a long time. Actually, well, how long was it? I'm going to say about 15 minutes. For 2 ticks, it's kind of, ugh. Yeah, then the same companies keep the middle management people with jobs who literally do nothing but have meetings every week. So productive. Well, so there's a couple of things that we can say about that. First thing is, I should point out, Paul, that a really large portion of the people that are getting let go right now, that the companies are targeting, are middle managers. I think that middle managers are probably having it the worst right now. The thing that's really frustrating about that one is that it seems to me that the thing that affects the productivity of the team the most is the manager. When we had, and I tell you what, like, this is like one of the places that I worked before. Something that I found happened was, okay, we need a new manager. Manager left or whatever the deal was, or it was a new team. And how they picked who was going to be the next person to be made the manager was like kind of moronic. Sometimes it seemed just random. Sometimes it was kind of like, this is just the guy that was the most senior. And there was a lot of them that I didn't think that they did a very good job. And they seemed really, really stressed out by it all the time. And, it's just like the thing that makes a good manager are very different from the things that make good software developers. A strange kind of trend you will see if you're like watching YouTube videos and there's these guys that they're talking about how to write good software and how to have good organization and all of these sorts of things. Like, probably the top creator in that space is the Primogen, right? They will almost always say that if they were a manager, that they didn't like it and that they went back. Because it's like a completely different set of skills. And for some reason, most companies don't seem to understand what makes a good manager. This was one of the secrets that I was never let in on at Goldman. Like, they had training for their managers. When you became a manager, they were good at it. They were good managers. Pretty much all of my managers at Goldman were good. Whereas other companies was like, oh, pretty much every manager was bad. So like, but I think part of it is when there's certain traits, and I'm not quite sure what they are, certain traits that you have to look for, and then you have to educate them. And what most companies do is they just say, okay, you're the most senior guy, you get the promotion now. That's the way it works, right? And then they pick somebody that doesn't have any of the skills necessary to do it, and they don't give you anything to become good at it. There's also this thing where they do spend a lot of time in meetings. I think part of the thing with the manager is knowing everything that's going on in order to make strategic decisions, right? But I feel like that a lot of managers' time gets wasted by meetings that were unnecessary. Situations where really they're calling a meeting to make a decision on something because people don't feel like that they have the ownership or they don't want to own it. You know, when really they could have just decided to do it that way a month ago and just already be past it, you know? So, yeah. I guess what I'm saying is I would try to be kind and understanding to the plight of a manager, because few things will affect your career positively or negatively more than your manager. If you interview for a job and there's something about the hiring manager that rubs you the wrong way, don't take the job. I mean, if you're really desperate, but you're probably get set back more taking a job with a manager that's bad and staying there for a year or two than you would another 3 months of unemployment. You go and find a good manager. You know who I think in the software development industry really deserves the criticism? Like if there's a group of people that like aren't pulling their weight or like we need to fix things. The place where I see the most problems is the product owners. Oh man, the product owners. Man. Having a good product owner is a night and day difference. Because the product owner is really supposed to be there to spend all of their time interfacing with the external clients and other teams and making strategic decisions. And most product owners that I've seen just keep track of Jira tickets and ask the team to make all the decisions. I was like, well, I could manage the Jira tickets, man. Like, I don't like playing multiple hats, but I've seen plenty of teams work just fine without a product manager, right? But then when the teams had a good product manager, it was crazy. They would do amazing. But what I find that happens a lot is you get people that they weren't technical enough to be in a developer job, you know? And then because they're not technical enough, they don't understand enough about the thing to make the strategic decisions, you know? Or they're too shy about making those decisions when it is something that they, you know, they're the business person and all, you know, and then they don't actually play their role. You know, I see that a lot. I'd say the place that I work, product managers are pretty good. You think the liquidity hole goes all the way from 20 to 45? Where are you? Okay, I don't know what you're talking about now. Unless you mean from 220 to 245. This is kind of an interesting spot because we have gotten stuck in another liquidity hole, it seems, but there's actually been a pretty strong change, negative change in cumulative delta down. And if I start, going down the JPY and looking at it, the JPY has been starting, they had a little bit of a bounce and they've started to move down again. So it looks like maybe there is flows selling because of the correlation. But again, because of the liquidity conditions and everything, it's not really moving it. They're not getting anything for it, which is kind of an unusual situation. Okay, well, there was a good downtick. Here's the S&P 500 opening up a pretty strong pop on the open. We use from S&P market open imbalance? Well, the market imbalances are something that I would definitely pay attention to if I'm trading equity indexes. I think that the closing imbalance is probably a bigger deal than the opening one. A lot of that kind of happens on the floor, and I don't know if there's really a place for us as retail traders to find an edge, but that's probably just because I've never found that edge. Maybe there's somebody out there that knows how to do it. However, this morning, the imbalances are all negative. I'd say 176 is just a mild imbalance. It's not until you get into like 500 and billions that they're like large imbalances. But there was a sell, but the S&P 500 popped really good on the open. I don't know. Maybe it was you saw it when you saw it pop, look at the imbalance and go, "Oh, we should sell this." I don't know. kind of weird. I don't understand as much about the opening auction process as I do the closing auctions process, so. From the Atlantic, life really is better without the internet. Oh boy. Japanese yen did just hit a new low there, by the way. But the treasuries aren't following it now. They have decoupled. And it's not necessarily because we're seeing buying flows in the treasuries either. Life is better without social media. Well, that might be true. You know, I spend, well, I don't know. You know what really, something that really kind of drives me crazy is the way in which the internet has evolved. The old internet, where it was a ton of tiny little sites and you could just browse around all day and discover new websites and new interesting things every day, was so much better. Like the old Reddit days where it was a new website every day and that website would get /dotted and all that sort of, that was the best. Now everything's in a walled garden. And that internet sucks. That internet sucks so hard. And so it's kind of like, yeah, well, there are some things about social media that are really negative. But like, what else is there to do online left? If I need a little thing or two to do to just between like when things are built or to kind of take a quick break, right? Like, I feel like browsing Reddit is the only thing. And I hate Reddit as a website. I just despise it. But it's the only game in town, you know? You think that they're going to recover all the way back to 26 now? If I open an account with Ninja, can I get your indicators and run Jigsaw Day Trader on one connection? Yes, you can, but you will have to use the bridge. Yeah, you know, create a market analyzer with a column that has the Jigsaw connection thing in it, and then it'll show up in Jigsaw. To do the downside of that is that you can't use the day trader charts. The day trader charts do not work through the bridge. Okay. So, good uptrend. We did get a downtick there. I'm seeing a fair amount of activity. Looks like we could be in a relatively more dynamic market now. Still got about 20 minutes till the news. What is this? Neurosymbolic AI is the answer to large language models' inability to stop hallucinating. Singularity Hub. I've never heard of that website before, but that's a great name. The main problem with big tech's experiment with artificial intelligence is not that it could take over humanity, it's that large language models like OpenAI's ChatGPT, Google's Gemini, and Meta's Llama continue to get things wrong, and the problem is intractable. Known as hallucinations, the most prominent example was perhaps the case of U.S. law professor Jonathan Turley, who was falsely accused of sexual harassment by ChatGPT in 2023. OpenAI's solution seems to have been to basically disappear Turley by programming ChatGPT to say it can't respond to questions about him, which is clearly not a fair or satisfactory solution. Trying to solve hallucinations after the event and case by case is clearly not the way to go. The same can be said of LLMs amplifying stereotypes or giving Western-centric answers. There's also a total lack of accountability in the face of this widespread misinformation, since it's difficult to ascertain how the LLM reached this conclusion in the first place. Oh man, that's so true. There's many times where ChatGPT will say something, and I'm like, there's no way that can be true. So then I go and I look up the documentation, I do all this stuff to see, and I can't find anything about it or figure out where it's getting this stuff from. But then I go and I try what it says, and it's right. Of course, it's wrong sometimes too, but it's just kind of random. But it's hard to figure out how when it is right. There are some situations where have no clue how it knows those things. Okay. We saw a fierce debate about these problems after the 2023 release of ChatGPT 4, the most recent major paradigm in OpenAI's LLM development. Arguably, the debate has cooled since then, though without justification. The EU passed its AI Act in record time in 2024, for instance, in a bid to be a world leader in overseeing this field, but the act relies heavily on AI companies regulating themselves without really addressing the issues in question. It hasn't stopped tech companies from releasing LLMs worldwide to hundreds of millions of users and collecting their data without proper scrutiny. Meanwhile, the latest tests indicate that even the most sophisticated LLMs remain unreliable. Despite this, the leading AI companies still resist taking responsibility for errors. Of course not. Do I have to pay for Ninja? Can I trade in Ninja without paying Jigsaw's monthly charge? Okay, so if you're going to use Ninja Trader, probably I'm not familiar with all of Ninja Trader brokerage's options. I think that they do have like month by month options and things like that. But the standard thing is to pay $1,000 for a lifetime license. Okay. Which is probably what I would do. Can you do it without paying Jigsaw's monthly charge? So the only thing that Jigsaw's monthly live trading license does is allow you to place orders on the DOM. So if you're okay using Ninja Traders, so you could have both DOMs up is one thing. You could open a static DOM and just, I don't know, make it really, really small and something like that. And then, just so that I can click and I can enter my orders over on this DOM. Okay. Or what's the other thing? The order ticket? Is that what it's called? Yeah, you could use this. So I think there's really big advantages of being able to click and do it over here. But to be able to submit them over here, you have to be paying the license. And if you have the bridge, it does it both ways. Like you enter the order over, you click over here, and then you'll see it show up over on this side in Ninja Trader. They used to give out Ninja Trader 8 for free, but now you have to have an account. Newer versions of their platform require account login at start. But there are still demo versions of it that are free, I think. I'm pretty positive that there are still free demo versions. It's just there's like lots of limitations. But if you get a Ninja Trader brokerage account, I don't know like what's the cheapest option for you there, but I do think there are monthly options. I guess we should pull up and see if we can figure it out. They do, quote, free trials now. I'm still using a free license from a long time ago. I have a developer license, but my developer license does not give me the Rhythmic data connection. I suppose that changes. But here, I'll show you. You know, we haven't been through this in a while, so I'll show you. When you come in here, there is Rhythmic, and there is Rhythmic for Ninja Trader brokerage. So when Ninja Trader was using Phillips Capital, I think it was, they had an option for Rhythmic. Now that there is the Ninja Trader FCM, Futures Commissions Merchant, they do not offer Rhythmic. So like Rhythmic for Ninja Trader brokerage doesn't work anymore. This demo license gives me the both Rhythmic and Rhythmic for Ninja Trader brokerage. But my developer license only gives me Rhythmic for Ninja Trader brokerage. What's with that? So weird, right? If you don't have one and have to say download the platform for the first time now, it will be a free trial. But does that mean that the license stops working after 2 weeks or something? Back up. I thought Octavius used Sierra charts, yeah? Why are you looking to change? Because why you're looking to change might be a significant factor in whether that transition would work for you, right? What's the actual problem you're trying to solve? Let me continue reading. You can create a free account. Okay. Maybe I should go and try again and see if the newer ones. Well, Uzi, are you using NinjaTrader 8.1? Oh, Uzi might be a bad example because he might have an old enough license to have the other one. Because if you have a multi-broker license that's earlier than like 2018, I think it is, then you'll have it. I want your cost basis here for life. Yeah. Oh, I see. You're looking to use it on NinjaTrader just so you can get the cost basis. I get you. You capitulated and upgraded? Okay. So, when you go to the connections screen, do you see a Rhythmic? Not a Rhythmic for NinjaTrader brokerage, but just a Rhythmic? The Rhythmic for NinjaTrader option is there, but not the regular one. Yeah. Still the same. You know what drives me nuts about this, actually? Okay, I shouldn't just outright say this, but like, I'm pretty sure that it would not be that big of a deal for them to go in and be like, oh, okay, we'll just enable this thing for Seth. Like, there's probably a checkbox somewhere in some database that somebody can go and set and they can do it. But the people that I'm talking to don't know or don't have the authority to do that, you know? So that really kind of drives me crazy. But I guess that would be doing a special favor for Seth, and maybe we shouldn't do that. I don't know. But it's just really annoying that you can't use Rhythmic with NinjaTrader anymore without using an old license. It's just like, what the heck? And that they don't have Rhythmic with the new FCM. So in Octavius's case, he could sign up for NinjaTrader free. Well, so if he just wants to use the inventory cost basis, then all he would have to do is use NinjaTrader for free and have a data provider to connect it to. But then he would have to have a whole bunch of other things. Because in this situation, unless you're gonna give up, so say he says Sierra charts for life, so like unless you're gonna give up the Sierra charts, it's like, yep. Paul tried it too. Rhythmic isn't an option, only the longer Rhythmic for Ninja or whatever. It's really dumb. And I don't know if that's intentional or if they don't realize that it's set up that way, but is this really strange niche scenario that I find myself in. And at some point, the 8.0 branch is not going to work anymore, and I will have to switch. Yeah. You don't have to stop using Sierra, just use NinjaTrader 8 on the side. But how are you going to get data for NinjaTrader 8, right? At that point, you're paying for 2 data fees. And then technically, you're supposed to be paying the professional fee. You know what I mean? Like, it's a janky thing. You know what was one of the things that happened was I was talking to guys from ATAS about trying their platform, and they said they would get me a license or something, and then they didn't get back to me. But I can get a demo license from ATAS. So if, you know, I eventually things go south with NinjaTrader, which isn't to say that like I hate NinjaTrader or anything like that, but it's just like their platform is moving away from a setup that works for me. ATAS might be my next best option. Unless Jigsaw ever gets to the point that I can do custom stuff, because it kind of sounded to me like they were going to allow it at some point. Just program it in Sierra. I would like to. Well, maybe next week. I mean, honestly, I could make another video, but like for the dollar index, for instance, I could just make these ones. Dollar index and market order imbalance, and those ones are ones I would just record on the screen here. Not as big of a production. You could probably do it in an afternoon. It'd probably be more than a day. It would probably be more than a day, to be honest with you. Especially if it's going to include the data caching and backtesting and stuff like that. Like just to make it show up on the chart, it's probably more than a day. Because, well, do I use filtering? See how bad it is. Oh yeah, you have to use the volume profile. So I do have to use a dictionary. I don't think that a dictionary in C++ is a huge deal, though. Wait, what are you saying here? Okay, I want to chuck CQG and clear through Sierra. I pay for 2 connections already plus Denali, so all 3 together. Can I get? Does Sierra charts support Rhythmic? I thought that if you were in Sierra charts, that you were just using Sierra charts and their data and stuff. Maybe that's an older thing. Not to mention, if you had half a brain, you'd offer it for a price and expand your market share of the indicator package. Wait, what? Are you just saying putting it on Sierra charts and offering it out? Yeah, but so there's a couple of issues. Okay. One. Okay, if we're just talking about the one indicator, that's one thing. If we're just talking about the one indicator, I don't think that it's a one-day thing. But my wife and kids are going to be visiting grandma next week. I'm staying here and working. So that would give me time in the evening to work. That would probably give me maybe 3 hours a day to work. So that's probably enough to build it. I'd have to convert over the code, but then there is the licensing bit. I think that Sierra Charts has a function for that I have to do. And then I have to set up the shop for it, right? So there's a couple of roadblocks, but not anything that can be overcome. And it's just kind of always been like, yeah, but how many people are going to buy it on Sierra Charts? Because I think that what will happen is I'll put it out and we'll maybe get, 4 or 5 subscriptions from it, and then, right? And I'm not actively using it. And the biggest barrier, though, is that I have to basically get some sort of a developer license or trial to do it. I guess, and there are so many things. Okay, so first of all, we got the news coming here. Okay, it is better than expected. 7.391 versus 7.1. Hey, did I call that one or what? They didn't break a new low yet, but let's give it a second. Seller's cost basis is 21.5, and now that seems to be, they seem to be having trouble getting below that. Ah, yes. Now, CQG does not have the same issues as Rhythmic, so if you have CQG data, you should just be able to download NinjaTrader and plug it in. But it will kick you off of your CQG connection on the other platform, right? Like if you're connected to CQG and Sierra Charts, you log into CQG and NinjaTrader, it's going to kick you out of Sierra Charts. See, there's all sorts of weird solutions to this. It's just that the ultimate solution is you're using Rhythmic Trader Pro and everything else connects into Rhythmic Trader Pro. And for some reason, NinjaTrader won't let you do that anymore. I think the first thing is that I have to get access to the platform. So I will look into it, or maybe, maybe you guys, if you know, you can look as well and tell me tomorrow. But today I'll poke around their website and maybe send a message to the EdgeClear guys, because I think EdgeClear still has Sierra Charts, right? So that I can build it, because I think that is now, sorry, going back to the to-dos, I think that is probably a better use of our time than the other things that we're looking at. The machine learning robot would be more than a 1 week thing. I do want to make this video about TradingView's backtester sucks, but I might have time to do both of those. So we'll see. But in the meantime, it is time for me to get going. So I will see you guys tomorrow. Still got more data, so tomorrow should be an okay day. I'm interested to see where we end up by the end of today, though. Are they able to continue going lower or not? I don't know. Like I was saying, if the jolts had been bad, then that really would have shocked the markets. It being good is, I don't know if that matters as much. So, but we'll see. All right, guys, stay excellent, team.